It's Thursday. Stocks moving lower 30 minutes until the start of cash equity trading. I'm Dani Berger. Matt Miller is off the rest of the week. Bloomberg Open Interest starts right now. Coming up, President Trump urges Iran to get serious soon, while Washington and Tehran send mixed signals on ceasefire talks. Lloyd Blankfein warns of a fire risk in private assets, saying a single spark could trigger a broader and sudden markdown. And on Wall Street, bonuses hit a record thanks to a surge in trading revenue and a rebound in M&A. All right, 30 minutes ago into the start of cash trading, let me show you what some of these stocks are doing pre-market. Jefferies, off the worst of its losses now, just down 0.7%. Missed Wall Street estimates. It had some losses on its credit bets, including MFS and First Brands. And then the memory chip stocks, they're down yet again. We talked about this yesterday. Google had announced a technology that powers AI that apparently can compress the amount of memory needed. But how big of a difference will it really make? Either way, these stocks have had a huge run up, so they are falling at least 2.8% this morning. Let's go back to our top story, though. As Iran continues to reject President Trump's push for talks, Axios reports that the Pentagon is preparing options for a final blow, including ground forces and a massive bombing campaign. President Trump posting on Truth Social this morning that Iran should get serious soon before it's too late. Joining us now is Wayne Sanders, Bloomberg Intelligence Senior Defense Weapons Analyst and retired Army Colonel. Wayne, it feels, again, like deja vu that we're escalating going into the weekend.
Yeah, I pretty much think that he saves these things normally for Thursdays and Fridays. I think part of it's tied into the end of his suspense deadline for the Iran 15-point plan that has been submitted and the arrival of the USS Tripoli that's expected to happen over the weekend.
So then what do we know of talks? If the president is sending troops, if he's telling Iran to get serious quickly, do we understand what talks, back channel or otherwise, might be ongoing at the same time?
I think everything that he does right now is to try and provide as much leverage as he can going into talks, right? You've seen that from when he parks aircraft carriers in specific areas, submarines, you name it, around the world, and this is what he does. This is obviously a much larger escalation with that, with the 13th Marine Expeditionary Unit and the 82nd Airborne being on their way. But I mean, those talks, the real question is who it's going to, right? And I think that's one of the biggest pieces that we're looking at is, Foreign Minister Abbas Araghchi. He's the one who denies having any talks, but then says that Iran is reviewing the ceasefire plan. Almost all other media, most all other messaging has come from state-sponsored Iranian media. It's not coming from some specific center of gravity supreme leader that can provide that overarching, message for the country itself. So it makes it difficult in this time.
Then what do you make of this Axios story, Wayne, that the president might be attempting to end it in a way that would include one last and large final show of force?
Yeah, I still, when I talk about the amount of risk that comes with putting boots on the ground, I still stick with that. Putting boots on the ground is one of the things that could at least put at risk some of President Trump's legacy, because at that point in time, you're allowing people to start looking back to 2003 Operation Iraqi Freedom. And nobody wants to have that long protracted war. So I think that's a fear that has to be addressed politically. But I do think that some level of decisive escalation option sets could potentially be there. Massive last phase strike campaigns, large scale coordinated air campaign to hit remaining targets of missile stockpiles, launchers. Think about like a 30 or 40% uptick, similar to maybe something that happened earlier on in the first 6 days of the conflicts. But really, or even violent destruction of Natanz and Fordo. I think I've actually talked with you about this before as well. Is if it's really about uranium enrichment, that those are the areas where that is actually taking place. And if that is something where, okay, we've already done it with Operation Midnight Hammer when that took place, but now if it was a true just blanketing of those areas to reach those areas deep within the mountain that we did not hit last time.
Wayne, thank you so much for joining this morning. That's retired Army Colonel Wayne Sanders of Bloomberg Intelligence. Let's shift gears now to tech news. Shares of computer memory, as I pointed out earlier, in storage makers, they're slumping. Google said yesterday its new turbo-quant technology can limit the amount of memory required to run large language models by a factor of 6. Bloomberg Tech's Caroline Hyde joins us for more. Caroline, I feel like everything I've been reading has kind of been pouring cold water on this, saying like it doesn't make that much of a difference, but still for a second day running, these stocks are taking a hit.
Can I take a wild bet you maybe heard Jevons paradox a couple of times
I have
again?
Indeed heard
it's
that.
Like DeepSeek all over you, Citigroup, JP Morgan saying, look, if we can do more with less, we just do more. It just means we're going to use these models even more. It just means that the amount of AI accelerators will continue to expand, and actually SK Hynix, Samsung, Micron will continue to see significant demand for their chips. The bottleneck has been the anxiety, and maybe we get a bit of profit taking. So I do think that's notable. Also, when you say it's new, look, Google's been publicizing what TurboQuant can do this week on X. It was actually last year that they first publicized about it. So you've been in the know, and if you've been really in the weeds on these stocks, then you perhaps would have understood the fact that we could do 6 times as much with certain memory going forward. But look, a lot of retail names, a lot of others have got into what have been ultimately momentum trades. I mean, Micron's up 300% last year. You've got some of these Asian names up 700%. No wonder there's a bit of like, maybe a bit of profit taking.
Yeah, I was going to say, how much of this is just about these things have run up massively? The amount of times that I've talked about Jevons paradox in the past year that I never thought I would. So elsewhere, I mean, Google related, Meta and Google found liable in this social media addiction case. The amount that they're paying, I mean, it's peanuts for them, right? Meta must pay $4.2 million. Google owes $1.8 million. I mean, that's truly nothing for them. So are there wider implications? Could this be more damaging for them down the road?
Could it be a tobacco-like moment is what people are trying to worry about. Look, the stock market would say no, and actually you saw the shares trade a little bit higher yesterday, even after the findings. But this is going to be knock after knock, headline after headline. Are these companies now going to take each and every case as it comes? A wall of thousands of claims are going to come from individuals, from schools, from states. And yes, as Matthew Schettenheld, who works for us over at Bloomberg Law, has said, and time again, this was probably the best they had in terms of resiliency of court case. So Kaylee MG, this GM, this is a 20-year-old woman in LA, has managed to persuade 10 jurors out of 12 that, yes, her own mental health crisis was down to an addiction of platforms, of social media platforms. Not the content she was served, but the way in which it was served. TikTok, Snap, they settled already before it went to trial. Google, Meta took it head on, and they have lost. But now the question is, do they all band together? Do they try and settle it all in one go? Or do they take just the headline risk of being associated with social media addiction time and time again? Look, Google has come out fighting, to talk of that name, saying they're going to appeal and stop making them out to be a social media company even in itself. They think YouTube is a streaming company. But Meta with Instagram says they're still looking at their legal options more broadly, looking to appeal. But this is the question. Academics and many out there are wondering, do we start to see this moment of contention where Bloomberg has its own documentary where it's about Can't Look Away, about how many parents have come forward, how Australia's banned it for 16s and under, how Asia is doing the same, Europe's considering it, the state of California might stop the young using social media. What does it mean for the business model? What does it mean for advertising?
And you just spent the past 2 days down in Washington, D.C., talking to tech leaders. I know a lot of it was about defense tech in this moment in Iran, but I'm wondering what the sense is among regulators, among Washington, D.C., if there is some pushback beyond just the court cases that these big tech giants might find themselves.
It's the one thing that maybe Congress can rally around at the moment. And in bipartisan nature, you've got a Democrat and at the moment you've got a Republican coming together. They've had policy on the docket. They've been looking to get people to rally behind this since 2022. But of course, lobbying helps, changing of those in the administration, changing of the way in which big tech is considered by this particular administration. But we are starting to see a reprisal of certain bills being put forward that could start to restrain the use of social media for the young, bring out some warnings, because this is ultimately what it came down to. There was negligence argued in the development, in the organization and the operation of their platforms, but also in lack of warnings. Now, these companies have put out warnings. They have changed many things about their business model. Are they going to be forced to do more?
Caroline, thanks so much for joining. Looking forward to Bloomberg Tech at 11 a.m. Eastern. Bloomberg Tech's Caroline Hyde. And by the way, our own original investigation, Can't Look Away, the case against social media. It is available and watchable on all of your favorite Bloomberg platforms. Elsewhere, Jefferies shares, they're slightly down this morning, only down 1/3%. They posted a first quarter result that missed estimates. It reported a record 54% surge in investment banking revenue, but also was overshadowed by losses on credit bets. Let's bring in Bloomberg finance reporter Catherine Doherty. And Catherine, we talked to you about these results before. It's something that you had been warning about. Just how big of an overshadow did the credit losses? Did MFS, First Brands, what kind of mar was that on Jefferies?
That's right. So those two names that you're just mentioning, only a $17 million write-down, which in the grand scheme of things is not dragging down the entire operation that for the first quarter posted some of their best numbers in equity trading and the core investment banking, especially pointing to strength in advisory and underwriting. But outside of that, these credit headlines that we've been posting and following, the company has been very public about their potential exposure. This write-down is what they're actually, it's what's going and hitting their top line numbers. And then they also had some unrelated outside of credit. There was a $36 million write-down tied to a sale of a telecom company that is just unwinding from something that they had already, again, publicly said that they were going to, but I think that was the unexpected number and clearly a much higher number than the 17 million write-down from the credit bets. So there's a lot of noise that is going on here, and that's what really analysts are pointing out, is that overall the strength in investment banking and in equity trading particularly is being overshadowed by these write-downs.
And everyone seems to be nervy, jumpy, whatever you want to say about credit anyway, so maybe that doesn't help. Catherine, you and the team have also been reporting on what a great year last year was, and that's maybe no surprise, translated into very good bonuses for Wall Street.
That's right. Yes, it was a record year, 2025. And what does that mean for not just the industry, but for the city of New York? This is a city that is benefiting from the rise in bonus pools, in just overall salaries, which posted their strongest performance last year. And that's despite the tensions that already were bubbling up and have continued this year. Clearly, I think the most noteworthy takeaway from this report, this is a report that comes from DiNapoli each year. He's pointing to more skepticism ahead. He says, however, we are seeing slower job growth and geopolitical conflicts, which have global repercussions that pose extraordinary risks for short and long-term outlook on the financial sector and for broader economic markets. So it's an interesting dichotomy here. You have, on the one hand, ending 2025 on such a high note, but he's pointing to a lot of skepticism of what's ahead. And bankers ultimately entered 2026 with a windfall. They had their best trading year, and M&A was a rebound that had been long projected and finally started to come through. The big question mark when we start hearing from the banks in April, and when they're going to be reporting their numbers following Jefferies, is does that momentum continue? We expect trading to continue because of how high volatility and volumes have been, especially with equity trading. But M&A is the big question mark. The start of the year started up pretty strong, but now with a lot of the uncertainty and the war breaking out a few weeks ago, we could start to see some pullback from that. And what that does to the overall numbers remains to be seen.
As Paul Taubman said on Bloomberg Deals, maybe it's time to put away the pom-poms. Catherine, thank you very much for joining. Bloomberg finance reporter Catherine Doherty. And by the way, she mentioned the New York comptroller Tom DiNapoli. He's going to be on the close, 4 p.m. New York time. A quick check on your markets this morning, 15 minutes or so until your trading day. Stocks are down this morning. It's all being led by the price of oil, fears of escalation as Trump says that Iran better get serious soon before it's too late. We still are on track, though, for a weekly gain. It would be our first weekly gain since the war broke out. 10-year yields, those are higher by 3.5 basis points, 436.79. Coming up on the show, a private credit fund managed by Ares posts a monthly loss in February. We're going to discuss the latest private credit concerns. That's up next here on Open Interest. Now to high interest, a look at what's making headlines around the world. The Iran war is jolting the global economy just as it was stabilizing. The OECD now sees U.S. inflation hitting 4.2% this year. That's up very sharply from earlier forecasts. Oil disruptions driving prices higher. The group warns that energy shocks pose significant downside risks to global growth. The Wall Street Journal reporting that Fannie Mae may soon accept crypto-backed mortgages for the first time. The product would let home buyers pledge crypto holdings instead of selling assets for a cash down payment. It's not the first crypto mortgage offering, but Fannie Mae's involvement could bring these products further into the mainstream. And former Goldman CEO Lloyd Blankfein warning that private markets are piling up Tinder. He says unsold assets may be overvalued and one shock could spark widespread markdowns. He spoke with Bloomberg's Francine Lacqua.
If you haven't had a crisis, it means you haven't had a reckoning. You accumulate tinder on the floor of the forest, and eventually a spark will come. The longer between intervals where there's a spark that sets it on fire, the more that accumulates. So at some point, there needs to be a forcing function or a reckoning.
Let's get more on those credit concerns with Bruce Douglas. He leads Bloomberg's leverage finance coverage. Bruce, there's a story this morning that Ares posted its steepest lossly month on record, but we should note in February that loss was under 0.7%. So can you put that in context for us? What does it mean for the fund to lose but less than 1%?
Yeah, I mean, it's a $23 billion fund, so it's a sizable fund, and it is its worst monthly loss on record. This obviously reflects losses in the public markets, where we saw steep sell-offs in the leveraged loan market, where obviously there's a lot of investment in the software companies that are also big borrowers in the private credit space. And it's notable that Ares is not alone in posting a loss in February. A Blackstone fund also saw its worst February in 3 years that month. So it is reflective of kind of wider unease in the industry.
Yeah, I mean, I was talking to someone from Apollo who is essentially like, of course these things are going to be down in February. If the leveraged loan market is down, we're going to mark our assets appropriately. But Bruce, I wonder if this leads to a bigger fear, the whole adage of sell what you can and not what you want to. If some of these funds are gated, if you can't get out more 5%, are we going to, or have you started to see stress on more public parts of the credit market as investors try to get out of some of their exposure as they want to bring in more liquidity?
Yeah, I mean, I think we're already seeing some of that stress. I mean, the leveraged loan indexes on both sides of the Atlantic have marked significant declines since the start of the year. As I say, one of the big reasons for that is this kind of fear of AI disruption and how that will impact the software as a service business model that is so key, such a key part of both the public leveraged loan market and the private credit market. And the real worry here is not necessarily just defaults. Default rates still aren't projected to be that high, but it's really about the recovery rate. If these businesses go south, they're very light, asset-light businesses. There's nothing to sell, there's no factory, there's just kind of lines of old code and a client subscription line. So there really is very little to be gained from a recovery if these companies do truly go south.
I guess, Bruce, does it make a difference then of being a big fund versus a small fund? Because presumably if something defaults and you're like an Ares, you have a restructuring team, maybe you can try to work with the business to try to get value out. What happens to more mid-market fund that doesn't have any of those resources, that all of a sudden is handed the keys and is like, we're just in the business of loaning to companies, not owning them?
No, I think that's a fair point. We have seen some consolidation in the private credit market, predating the current unease, that actually the bigger firms are starting to squeeze out some of the smaller competitors. That's certainly been a phenomenon that we've seen here, and fundraising has continued apace for the big kind of marquee firms, while some of the smaller ones are struggling to keep kind of investors on board and continue to raise funds. And obviously, when there is such concern, investor concern, as there is at the moment about both kind of credit quality and about the ease in which investors can get their cash back, there tends to be a bit of a flight to safety, and obviously the bigger names are likely to be beneficiaries of that.
Bruce, can I ask you about something else I've been thinking a lot about with this whole concern around private credit? One of the big defenses, this is something Mark Lipschultz, others have said to me, that are like, look, if you're worried about private credit, then you should also be worried about the leveraged loan market. If private credit's doing poorly, then equity should be doing really poorly, and private equity should be doing really poorly. Bruce, I wonder what to make of that defense when one of the arguments for these private assets was that they were less correlated, was that there was an illiquidity premium. Does the fact that they're behaving a lot like the leveraged loan market, or even that their defense is like we're doing just as well as these other asset classes, suggest that maybe there is more correlation there? Maybe the illiquidity premium's not as great as we thought?
I mean, I think that's a very interesting point. Apollo's Jim Zelter, speaking in Australia the other day, made a similar point. Though it is a rather strange one. It's sort of like saying, well, you know, if you sprained your ankle, but, you know, what about the leg that's falling off? It's a rather odd way of looking at it. Clearly, if there are issues in private credit, then, and the credit is senior to the equity, then you would expect to find private equity there. And it does somewhat undermine that argument that it is a less correlated asset. And I think that is an area that is worth looking at. Private equity firms, as we've seen, are struggling of late. And I think that these question marks in private credit obviously then feed upstream to serious questions about private equity firms as well.
Bruce, really appreciate your time today. That's Bloomberg's Bruce Douglas. Coming up, Envestnet's Dana on whether investors are underestimating the cost of the Iran war. Stay with us. This is Bloomberg Open Interest. Equity markets moving lower just 5 minutes until your opening bell. We're down 0.9 for the Nasdaq 100. That underperforms. The S&P down 0.75%. Fears of escalation. The president saying on Truth Social that Iranian negotiators better get serious soon before it's too late. And then Axios comes out with a story that the White House is preparing for a large surge in Iran to close it out. Brent crude moves higher by 4.3%, 10-year yields up by 3.5 basis points. Let's quickly go through some of the movers this morning. Precious metal miners, they're lower after a renewed drop in gold and silver. Those have been acting more like momentum assets this morning. Barrick Mining, for example, down 2.8. Henkel is buying hair care brand Olaplex. It's a $1.4 billion deal. Shares are up 50% in the pre-market. Then office furniture giant Miller Kroll dropping after it signaled a slowdown in demand and increased costs from shipping from the war in Iran. We'll have your opening bell coming up next. We are about to kick off trading on this Thursday. You're watching Bloomberg Open Interest. I'm Dani Berger. Matt Miller has left me on my own this morning. S&P futures, NASDAQ futures, all of those are lower. Concerns that it's a deja vu. We're heading into the weekend. Not yet. We do have 2 trading days to go. But with escalation threats coming from the president saying Iran needs to get serious, an Axios report about sending more troops for one final push in Iran before the end of the war. Russell 2000 futures, those were actually trading at a 2-week high, but now they're off more than 1%. So at the opening bells, something a little bit unusual, something you don't see every day. It is a takeover from both the New York Stock Exchange and the NASDAQ of a company called IR Impact. Apparently they used to be IR Magazine, so they're a bit of a trade publication. They're giving out awards for investor relations. I'm sure we have a lot of IR professionals watching the show, so congrats to you out there if you've won an award. I have to say, I think the NASDAQ has it better because the NASDAQ, I believe, has the CEO, whereas the New York Stock Exchange just has their head of content. I might have mixed that up, I'm going to be honest. But one of them, you know, they split and conquered. I don't know how you decide who goes to who. Okay, let's go to your pre-market movers so you can stop hearing me rambling on about IR Impact. Jefferies now up more than 1%. There had been some concerns about them before that they were seeing credit impacts. They were seeing losses from MFS, from First Brand, some other things in there too. However, they did notch their best investment banking quarter ever. So now shares are starting to reflect that. The memory chip stocks, those are having a bad day after having a bad day yesterday, down 4.6% for Sandisk. Micron falls nearly 4% in the pre-market. Google announcing yesterday that it has a new technology that can power AI at just a fraction of computing power currently needed, though I have to say a lot of analysts pouring cold water on that, saying it's not going to make that much of a difference. Elsewhere, back to our top story. Top brass at BlackRock believe investors are underestimating the impact of the war in Iran. BlackRock President Rob Capito says, quote, "What if this disruption is a week, 6 months, a year? What is it going to mean for the companies that I own? My biggest concern is that people aren't looking at this. They're just making the assumption for an optimistic outcome. Add to that the OECD sharply increasing its inflation forecast today due to the war, predicting a 4.2% jump in the U.S. this year. Let's bring in Envestnet's co-chief investment officer and group president, Dana Stroul. Dan, great to see you this morning. Would you agree with the likes of BlackRock that maybe we're not fully pricing in the risks that are coming from this war?
Yeah, I have a similar assessment. I mean, I think what we all expect typically in cases like this is that there's a plan in place that's going to prevent any sort of long-term problems, upset to the market, et cetera. And I think what we're kind of discovering is that that doesn't appear to be the case, right? There doesn't appear to be a good plan ahead of time for how we're going to get out of this, what goals we're even, necessarily trying to achieve here, and what victory looks like. And so if that's the case, then, you have sort of this exacerbating circumstance where you have Iran, you have Israel, who maybe want the conflict to last a little bit longer, right? They both think it potentially helps their position for it to last longer. And so if we don't sort of have that plan going in, which again, typically markets kind of look through this stuff, even the Fed, right? Which I think is one of the big, results of this is what happens with Fed rate. But even the Fed will typically look through a short-term supply shock in oil. But if it's not short-term, to the quote that you kind of read, then you do have more serious long-term issues that you have to look at in the market.
Then what would that actually look like? Stocks now down maybe about 5% since the start of the war. Is that what's mispriced? Is there something else that you think looks a little off given what you're talking about, the threat that this just keeps going on and on?
Yeah, well, I think, I mentioned one of the biggest issues is, of course, what does this mean for rate cuts, right? So you had a market that we came into the year obviously very strong, and the market was pricing in something like 2 rate cuts probably. And we had a weak jobs report obviously come out in February, declining 92,000 jobs. So that was unexpected. We also had revisions to earlier months that took away jobs. And so that balance that the Fed looks at between inflation and unemployment, inflation's already been a little stickier than we want it to be. But the employment picture was starting to show cracks. And so the expectation was that we would get some rate cuts. Now, if this is not a short-term shock, if energy prices are going to remain elevated, and in fact, many other products that rely on the Strait of Hormuz and rely on energy itself, right, in terms of the supply chain could be impacted, the Fed is not going to want to react quickly. They're not going to want to let inflation run away, so if it looks like this could be longer term, then you have that impact to rate cuts. You have all the, resulting economic impacts of that.
So it's a great point. And Dana, I've just heard over and over, and I mean, it's hard not to agree with this, that the impact will just depend on the duration for this. The longer it goes on, the worse it is. But I have to wonder, even though it seems like we might get an extension, Trump is talking about bringing troops into the region over the weekend. Even if it were to end tomorrow, it takes a while for the energy taps to be turned back on. There's already disruption to the Strait of Hormuz. We know that Iran can control it. Will that even be open again? Is there already a scenario built in, again, even if the war were to end tomorrow, that we will have a longer term impact just because of the delays in getting everything back to normal?
Yeah, that's certainly what the information kind of seems to indicate, right? All of the sort of experts on this are pretty clear. This is not, even if it, to your point, even if it ended tomorrow, you're going to have months of getting everything back on and getting the strait straightened out, so to speak, and, kind of shipping where it needs to be again. So 100% there's long-term impact here. And I think there's also long-term impact in terms of the message. We've already been sort of in a place where we've had this idea of globalization really under attack, and countries sort of realigning around, internal supply chains with friendlies, and sort of losing that globalization dividend. And obviously there's an impact to that as well. But I think you are right. Much as it may take months to get it back going, the market keeps ticking up every time it looks like there might be a ceasefire. It looks like, negotiations might be taking place. And there's a reason for that, right? It's markets, because at the end of the day, if we could see an end, right? If we can see a timeline here, then we can start to calculate, okay, this is the damage and this is what we can get past it. I think the real uncertainty around, wait a minute, how long might we be mired in this, right? What are we in for here? Is this something that could go on for a long period of time? Is the real risk.
So with all of that risk, Dana, where do you hide out? Because gold is not giving you that protection. Bonds, you were just talking about the concern that the Fed isn't able to cut, even if we do have weaker job growth. Where do you get protection right now?
Yeah, I'm a proponent of diversification. I don't think there's any one place. I mean, gold is suffering. You know, obviously, a metal doesn't have any dividends, and if we have higher interest rates, then bonds are not a terrible place to be. But I think in terms of a diversified portfolio, I mean, 2025 was a fantastic year for diversification. We really we started the year with sort of this theme of U.S. predominance, but international emerging stocks returning, significantly more in a year that the U.S. already returned double digits, right? And so we're seeing that still, kind of today. And there's an argument to be made for international stocks suffering even more from this. But I think diversification across the spectrum, not trying to say, to your point, there are going to be certain industries, certain sectors, certain companies that are more affected than others, and the market will start to try to price that in. For the average investor, diversifying across the portfolio is going to be the safest way. And yes, bonds, I mean, the interest rates, you're getting a return, right? The higher that interest rate, at the end of the day, you're getting a higher yield. So I think you want, kind of a good portfolio of equity and fixed income with ballast.
Dana, we're going to have to end it there. Thank you so much for joining us this morning. That's Envestnet's Dana D'Auria. 9 minutes into your trading day, let's get a check on your equity markets. They are moving lower. I believe we are still on track for a weekly gain, and it would be the first since the war broke out. But if these losses deepen, we could undo that. On the upside, interestingly, energy is doing well. Not a surprise at all. You'll see that when we look at the sectors. But a lot of these financial services, credit card companies like MasterCard, Visa, they're doing well, and I'm not quite sure why, if I'm being 100% honest. On the downside, it is all the big cap giants that are selling off, which is why it's difficult for this market to get a bid. NVIDIA, Meta, Alphabet, Amazon, it's a who's who of all of the Mag 7, so if they're down, the overall market's going to be down too. A lot of the chip makers having a bad day, Lam Research, Micron, all of those falling. Broadcom on this Google news that they have developed something that can compress the amount of memory needed. There's a question to how big of a difference it will make. Nonetheless, the shares are selling off. Looking at the sectors, energy, the only one that's up today. No surprise, this is dictated by the price of oil. One of the things I do want to point out, it's something Matt and I had talked about in the first couple weeks of this conflict, that there was some weird aspects to this market, that the safety stocks were getting destroyed, that healthcare wasn't doing well, staples weren't doing well, utilities weren't. Now we have more of a textbook risk off, where some of the safety sectors, yes, they're down, but they're not down as badly. Financials also not down as badly. We had Jefferies earnings, their best quarter for investment banking on record. Coming up, we're going to talk more about that memory chip sell-off. The rally hitting a snag as Google's latest breakthrough limits the capacity needed to power AI. This is Bloomberg Open Interest. Nearly 15 minutes into your trading day, not starting off so well, but we're only down 0.7%. The NASDAQ 100 seeing steeper losses. NVIDIA, all the big tech giants are selling off, hence you get that reaction. Everything, though, dictated by the price of Brent crude. We're now back above $106 a barrel, up 4.5% or just under there. There had been some reprieve yesterday as Trump attempts to de-escalate, and now it seems like we're escalating again. If the Axios report is indeed true, that this is a White House that is contemplating one big last and final push militarily in Iran. Let's get some of the top calls, the analyst action that we are watching this morning. First up, JP Morgan downgrades Scott's Miracle-Gro, saying the company will probably have to spend more on things like fertilizer ingredients, fuel, and plastic due to the conflict in Iran. Shares down 4%. Next, William Blair, they cut its rating on Adobe, saying competition is heating up, making it unclear how strong Adobe's AI edge will be Going forward, shares up 0.5%. Finally, Qualcomm, that gets downgraded at Bernstein. The firm warns that rising memory prices are weighing on smartphone demand and could drive double-digit shipment declines, with conditions that will probably get worse before getting better. Shares are only down 0.4%. Elsewhere, Google's new technology dramatically reduces the chip capacity needed to run AI models, sparking a global sell-off in chip stocks. Let's go back over to the desk, because waiting for us patiently over there is Bloomberg Intelligence Global Head of Tech Coverage, Mandeep Singh. Mandeep, thank you so much for joining.
Yeah.
Okay, so in looking at this, I feel like every single analyst I've read from is like, this is truly no big deal. It doesn't make that much of a difference. How big of a difference does it make? Is a sell-off in memory chip stocks warranted off of this?
Not really. I mean, you could see, inference efficiency being a bigger focus for all these companies that are spending, over $100 billion in CapEx. You want to optimize for your infrastructure. So to me, Google accomplishing that through this new technique is just a sign that, one, they clearly have an advantage when it comes to CapEx efficiency with their TPUs. And now they are actually using the memory part probably better than some of the other hyperscalers who are investing their CapEx. So efficiency is something that we'll hear more and more of. But does it warrant a sell-off in the memory names? I don't think so, because we are so undersupplied. And, Qualcomm downgrade, you just, talked about that. Why? Because of memory prices. So there are a lot of pockets where even if Google doesn't need memory, the edge devices need a lot more memory. So from that perspective, I think that supply-demand imbalance is huge when it comes to memory right now.
If only markets were efficient, we all weren't tourists, and we were more like you, Mandeep, and knew better. But it's interesting you talk about Google. Is the net tech takeaway from this then? It's just like Alphabet seems ahead in terms of what they're doing with a lot of their technology and their efficiencies.
Absolutely. For every dollar of CapEx spent, I think Alphabet clearly has an advantage with the vertical integration, the chips, their own LLM, now the memory compression. And so clearly they will generate a higher ROI on this CapEx. Now, they will have more competition in the ad space, and that's the part that's it remains an overhang, for even a name like Alphabet, because the core ads business will come under pressure from, ChatGPT and other companies really launching agentic offerings. And if you start doing things that are agent to agent, then a lot of the ads spent, on Google platform will come under pressure. And so that is a risk for them, regardless of how well they're doing on the infrastructure side.
By the way, were you looking at this Meta Alphabet court case at all? This idea that they're found liable for social media addiction. The fees, the fines they have to pay were incredibly minimal compared to the overall company. The big headline, like, is this social media's tobacco moment? Is it their tobacco moment?
I think you should expect more regulation when it comes to social media platforms, and we have been talking about it, for a very long time. We have seen quite a bit of regulation in the EU around, and look, countries like Australia have banned, like Meta platforms for users under 16. So you're starting to see, countries and regulators act. But it's very hard to, regulate these on one instance or, even a few instances. And that's where regulating social media has been hard. So I don't know if that changes anytime soon.
I guess it only gets harder when all of a sudden AI is in the picture too. Mandeep, thanks so much for joining. That's Mandeep Singh of Bloomberg Intelligence. Coming up on the show, consumers starting to feel the heat of higher prices of oils at the pump when booking travel and now shipments with the U.S. Postal Service. We're going to talk about crude coming up next on Bloomberg Open Interest. You are watching Bloomberg Open Interest. Let's check on your markets this morning, 20 minutes into your trading day. The worst of the losses on the equity markets now starting to ebb This coming from Tasnim, Iran saying that it has formally responded to the U.S. ceasefire plan, that it cites informed sources on U.S. truce plans, and Tehran is waiting for a U.S. response. Why are we doing better on just that? It might be the very fact that this is a confirmation. Talks are ongoing. They have received the U.S.'s 15-point plan. It's not that continuous denial of talks don't make sense. They've responded, but they want things like an end to all hostilities before they talk about any sort of ceasefire. So we're only down 0.4% for the S&P, NASDAQ, 0.7. The Dow Jones goes positive. As for your other movers, everything really just bouncing off the back of this. 2-year yields, they are at 3.9%. 5-year yields were above 4% at one point. So yes, yields are still moving higher. The losses are still gathering, but it's not as bad as it was about 10 minutes ago. Gold continues to get beat up. Where do you hide out for safety? Dana Dioria says you just need a diversified portfolio. That gold isn't going to do for you. Certainly Bitcoin isn't. That's down 1.8%. And then the price of crude in New York now up 3%. Brent crude up 3.8%. Again, it was up more at one point this morning. It was up more than 5%, but all of that coming off the back of this idea that Iran is responding, and they sent a response to the U.S., and they're now waiting what the U.S. has to say. So that rise in the price of oil, it's already impacting consumers making travel plans. United CEO warning of airline ticket price hikes, and USPS adding a new 8% surcharge for packages. Let's discuss the ripple effects with Will Kennedy, Bloomberg News director for EMEA. Will, I thought it was supposed to be a U.S. that was more insulated. It's energy independent. The price of NYMEX crude isn't as high as it is in Brent. So why are we now starting to see corporations struggling or adding additional costs because of what things like jet fuel and diesel are doing at the moment?
Yeah, thanks for having me on, Dani. Well, even at $93, oil is considerably higher than it was at the start of the year. NYMEX had traded in the low 60s in the early part of the year, and we're already up to 93. So that in itself is a big change, but these markets are global. And it is feeding through, and product markets are stressed, and that means prices of gasoline, jet fuel, etc., are outpacing the price of the crude oil that goes into the refinery. We see that in gasoline, where we're on the verge of $4 a gallon average at the US petrol pump, gas pump, and that's the sort of level that consumers really start to notice.
Well, I was mentioning a response from Iran, it appears, that is happening right now to the U.S. plan, the 15-point truce plan. This also coming from them. Iran saying that Hormuz sovereignty will remain its right. As long as this is Iran's posture, even if there were to be a ceasefire, even if there were to be an end to the war, the fact that Iran is saying that it has sovereignty, that it remains its right, can we just expect elevated oil prices, that fundamentally it needs to reset before it was before this war?
Perhaps. I mean, it will depend on how the war actually ends, and it will depend how Iran chooses to enforce that so-called sovereignty. Many countries, including the US and Gulf monarchies, the allies of the US, UAE and Saudi Arabia, will not accept that sovereignty. They will argue that this is an international waterway and should be treated as such as it has for many, many, many years. And I think this is the crux of the issue. And Iran, as long as Iran makes that assertion, it will be very hard to reach a permanent resolution here. And you're right to say that uncertainty will weigh on oil markets, because it will be very hard for people to have confidence in the free flow of oil in and out of the Persian Gulf.
What do we know about what sort of ships are getting through the Strait of Hormuz at this moment, Will?
Well, the first thing to say is very few of them. So ship movements through the strait are happening, but they're happening at a vastly reduced rate. It was probably more than 100 ships a day before this conflict started. We're now less than 10, probably. It's sometimes a bit hard to count. But there has not been a real resumption in flows. Now, it seems that the Iranians are allowing some ships through, perhaps after negotiations, perhaps with payments involved. Some of the ships that we've seen through are like Indian LPG carriers that they need. But what we haven't seen is large movements of oil through the strait.
Hey, Will, thank you very much for that. That's Bloomberg's Will Kennedy in London. Coming up on the next hour of Bloomberg Open Interest, Aoifinn Devitt of Moneta talking about how to trade this market that keeps moving dramatically on the ping pong headlines. And we're going to hear from the former Deputy Assistant Secretary of Defense for the Middle East and a cabinet meeting. That's also coming up. "30 minutes into your trading day. Welcome back to Bloomberg Open Interest. It's Thursday, and the losses on stocks aren't as bad as they were a mere 30 minutes ago when we opened this market on reports that Iran has received the plan from the U.S. and they have sent a response. So talks are ongoing. Coming up throughout the show, President Trump urges Iran to get serious soon, while Washington and Tehran send mixed signals on a ceasefire talk, but again, hopes that talks are actually happening, lifting stocks, or at least saving them from the worst of declines. The Iran war is jolting the global economy just as it was stabilizing. The OECD now sees U.S. inflation hitting 4.2% this year. And Lloyd Blankfein warning of a fire risk in private assets, saying a single spark could trigger a broad and sudden markdown. The Pentagon is weighing options for a potential final blow in Iran. Axios reporting President Trump posted on Truth Social this morning that Iran should get serious soon. Joining us now is Becca Wasser, defense lead for Bloomberg Economics, who has led war games for the U.S. Department of Defense. So, Becca, you know how this goes well. These negotiations, what do you just make of the latest we've heard from Iran, saying it has formally responded to the U.S. ceasefire plan, that it is waiting a U.S. response, that it wants guarantees that the war will not be repeated, and has said that the Strait of Hormuz, that it is the sovereignty that oversees it and it will remain so?
I think there's a really wide disconnect that's happening right now between the U.S. 15-point plan and the Iranian 5-point plan. And much of this disconnect really mirrors what happened in the negotiations that were ongoing prior to the start of this current conflict. So at that point in time, both sides couldn't come to the table and couldn't come to an agreement. There was too much distance between them on these really core issues like the ones that you mentioned. And once again, we're seeing that. I think the White House's theory of the case here is after continued degradation of Iranian capabilities, after such an intense strike campaign that has seen thousands of Iranian civilians killed, that they're hoping that Iran's going to change their tune. But for Iran, this is an existential conflict, and that means that no matter what, Iran is going to continue. So at the end of the day, I think negotiations are probably almost dead on arrival.
I was going to say, one of the things I'm assuming would kill the negotiations is Iran insisting that it has sovereignty over the Strait of Hormuz. Is that just a non-starter for this American government?
It most certainly is. I think all of the rhetoric that we've heard from President Trump is about ensuring that the Strait of Hormuz remains open. It's worth noting that Iran hasn't formally closed the Strait of Hormuz. It's been the mere threat of potential, action alone that has made, commercial shipping run scared, and for good measure. But so really for the United States, it's trying to keep the Strait open and ensuring that there can be a free flow of commerce. But for Iran, it's also very important to them that they demonstrate that they have the ability to play this lever whenever possible because it's core to their own deterrence and protection.
Becca, I'm sure you have seen this Axios report overnight saying that in order to try to reach an end to this war, that the White House would consider a large surge. And we already know that troops, that Marines, are on their way to the region with the conclusion of this 5-day pause, if you will, from the president. That's 48 hours away, less than that now, of the pause being ended. What are you looking out for as to what might happen over the weekend?
So, I think in the most immediate future, the Marines that are going to be in the Middle East by Friday alone, they are not enough for any of these ground options that the White House is reportedly considering. However, when you look at the Marines plus the reinforcement of an additional Marine Expeditionary Unit, the potential for the 82nd Airborne to also join, then you're looking at a little bit larger force, but they would need to have additional supplements. But that being said, the things that are reportedly potentially on the table. It's a potential seizure of Kark Island or some of the surrounding islands. It's a potential quarantine of those islands or the broader Strait of Hormuz. It's the potential for, a campaign to try and eradicate some of the air and missile threat along Iran's coast to make way for safe shipping. And then there's also the chance that U.S. Special Operations Forces could be dropped into Iranian soil to try and go after Iran's stockpiles of highly enriched uranium. So there's a lot that's potentially on the table, and every single scenario is incredibly risky for U.S. forces and politically for President Trump.
Well, and the thing this market is trying to divine is how long this thing lasts, Becca. Are any of those options, do any of them shorten the timeline of this conflict? Or, to your point, lots of risks, perhaps it elongates it?
I mean, none of these are really the final blow that the White House wants it to be. I think we are seeing rhetoric that shows that President Trump really wants to end this war before it turns into a much longer protracted conflict. But I don't think for Iran, because it's an existential conflict, this is going to be the thing that completely is a game changer. And our base case right now is that we are going to see a period of higher intensity warfare, an escalation, if you will, followed by a much longer low intensity conflict. So I think markets should be preparing for a protracted conflict, and that's going to be across a variety of sectors, including the defense sector.
Becca, really appreciate your time, as always. That's Becca Wasser of Bloomberg Economics. Let's get to the market consequences. Joining us now is Aoifinn Devitt, Global Wealth Managing Director at Moneta. Aoifinn, just there, one of our Bloomberg intelligence experts saying that markets should be prepared for this to go on for some time. Are markets prepared for that? And if not, what would pricing it in look like?
Thank you. I don't think markets are prepared for that. That is a fairly sobering assessment as to where we are. And markets right now are looking for an easy fix. They are grappling with this elevated price of oil, and nobody has factored that into their models. So there is a real desperation to discount in a quick resolution to this and ensure that we'll be back to business in May. We know the elections are coming. There's a real focus on that and what that means in terms of the outlook for the president and his popularity. And I'd say markets very much are not looking at the longer term time horizon. They're working on a much shorter time frame.
I guess part of the problem for market participants is the recent volatility and disruptions we've had, whether it be COVID, be it Liberation Day around tariffs. Markets, one, sold off much more sharply than they have in this conflict, but two, rebounded sharply also. Is there any reason to believe that this time is different, that any sort of sell-off we might get from the war will be short-lived and therefore it's painful to join in on the sell-off or to be outright short the market?
It's interesting. There's been a lot of pattern watching going on, comparing, say, this to Liberation Day. And Liberation Day was the classic kind of V-shape recovery, a sharp fall followed by a sharp recovery. This is much more kind of a slow bleed, a slow erosion of those returns we've seen so far. I think just as your correspondent suggested, there is no real clear resolution. So we'll likely have a lot of fits and starts as these negotiations become protracted. There will be perhaps claims of early victory and then more protraction. So I see that as being more a continuation of this volatility that we're seeing, as well as just the uncertainty. There's so many areas of uncertainty in markets right now. Investors are really shuffling between them, wondering which on the wall of worry to worry about today.
Well, even though stocks have only fallen 5% since the conflict broke out, there are signs of exactly what you're talking about, shifting around, trying to figure out how to climb this wall of worry. This from Bank of America today, that cash holdings among the survey participants that they have jumped the most in 6 years. Aoifinn, is cash the place to hide out right now?
Well, it's interesting. Cash has not been a drag for many years. I'd say with the suggestion now that interest rates are not coming down, it looks like it will continue to be reasonably a good place, at least to make a return. However, we have to look at inflation. You cited an inflation number earlier that's over 4% in terms of forecasts. Cash, therefore, has a higher hurdle in order for it to be actually meaningful in real terms. So cash is on the sidelines, sure, as dry powder. We know that it doesn't stay there long. There is a clear desire to get back on risk at any opportunity, which is why we've seen these downturns you mentioned lasting not as long. So I'd say, yes, the cash on the sidelines, and we look at money market funds, well over 7 trillion. That is a factor, but it's also supportive for markets down the line.
So have you changed at all any of your outlooks, any of your recommendations, Aoifinn, since this war has broken out, and what you would do to the portfolio?
We definitely have reassessed what we consider to be a safety asset. We'd say in terms of safety assets, we would have thought about short-term government bonds as well as gold as being maybe a good sort of safe haven. That has clearly not been the case. We see energy as a bit more of a safety asset. We're actually going back to those rotations that have persisted now since the beginning of the year. Growth to value, US to non-US, large cap to SMID. Those type of rotations, we believe, have real meaningful role in our portfolio today because that's where the breadth will be. And we do know equally that the war will have many fallouts. There may be perhaps domestic tourism taking advantage of the fallout in foreign tourism. There will be winners and losers, so having that rotation into a broad portfolio, that makes more sense. Have we changed our outlook? Well, we have to change our outlook when we look at interest rates changing. And equally, you mentioned the private credit earlier in the program. Private credit looks like a problem today, so we're definitely more cautious around that.
I'd love to hear more about that. What does being cautious look like? I mean, the Ares fund that saw its worst decline in some time, I mean, it was only a decline of like 0.68%. I mean, pretty minuscule, all things considered, but there are lots of concerns around it. What are you doing? What are you avoiding? How are you changing with these bubbling up fears around private credit, be it about liquidity or performance?
Well, we've always steered clear of the interval fund approach, the quarterly liquidity promise, which never really comes to pass. So we've always been wary of that, and we're definitely steering out of that. We're also trying to make sense of the narrative, just in terms of, we heard the Goldman Sachs commentator earlier suggesting that there was going to be one spark and everything could start to fall apart. We actually take a different view to that. We suggest that there's a lot of really idiosyncratic, nuanced areas within this. There's no one spark because the banks themselves do not have that kind of systemic risk that they would have had in 08. So when you have individual boutique firms, there isn't going to be that same kind of contamination across the board. There may be a spark in terms of a sell-off in some of those quarterly funds, but that is only a subsection of private credit. So I think we really have to be very careful not to get carried away with these kind of sweeping statements in an area which is almost $3 trillion now and highly idiosyncratic.
It's a good point, but I do wonder if there is a bigger knock-on effect from the desire to redeem at these private credit funds, and nothing to say of the underlying quality of the assets themselves. But clearly redemptions are starting to stack up, and the gates are being put up so these investors aren't getting all that they want out of it. It's that old adage, right? Sell what you can, not what you want to. Should we be looking for spillover effects in more liquid parts of the market if these investors can't redeem as much as they want to from some of these interval funds?
It's a great question. I would actually question whether anyone's redeeming because they need the money or because simply they're getting wind of this contagion and they don't want to be last left on the sinking ship, so to speak. These redemption gates are actually there to protect investors. The 5% level is there very much to protect them from being forced sellers, the funds from being forced sellers, in order to crystallize some of the losses. So yes, it is penalizing when you're there trying to get out and you're forced into a queue. But I think in the long term, we have learned lessons from 08. In terms of spillover effects, we know that most investors are generally invested in highly liquid assets, whether that be equities, bonds, etc. So that's where they will hopefully get their liquidity. We don't see them being forced sellers. I think my question is, who are the sellers? Particularly as we see that insiders in some of these private credit funds are trying to buy in. And we also have well-known hedge funds also trying to pick up these private credit funds at a discount. So if the so-called smart money is trying to get long, why are the retail investors selling out at the bottom?
A fantastic point. Aoifinn, we're going to have to end it there. Thank you so much for joining us. Aoifinn Devitt of Moneta. A check on markets about 45 minutes into your trading day at this point. We are still selling off, down 0.4, down 0.7 for the NASDAQ. We're on track for a weekly gain. But the worst of loss is ebbing after Iran saying that it had formally responded to the U.S. ceasefire plan. So it looks like we are in the stages of fighting and talking instead of just fighting. 10-year yields, though, still move higher, up more than 2 basis points at 435.60. Brent crude still above $106 a barrel, up 4%. Coming up, G7 foreign ministers are gathering in France with no end in sight to the war in Iran. We're live from the meeting next here on Bloomberg Open Interest. Now to high interest, a look at what's making headlines around the world. The U.S. plans to mandate significantly higher wages for H-1B workers and immigrant employees sponsored for green cards. The proposal aims to ensure that hiring of foreign employees doesn't undercut the wages of U.S. workers. The H-1B program has become the chief target for opponents of foreign hiring in the United States. Wall Street bonuses hit a record $49.2 billion last year. Payouts averaged about $247,000. The surge was driven by strong deal making, trading, and looser regulation. But rising geopolitical tensions and slower job growth is casting uncertainty about what comes next. And The Close is going to be talking about this more with the New York comptroller, Tony DiNapoli. Look out for that interview at 4 p.m. New York time. Charles Schwab rolling out brokerage accounts for teens, targeting investors as young as 13. Where are the 13-year-olds getting that money from? The accounts are held jointly with parents and allow trading in stocks, fractional shares, exchange-traded funds, mutual funds, and fixed income securities. The move comes as financial firms compete for Gen Alpha, which has over $100 billion in annual spending power in the U.S. Again, I ask, how? Anyway. Elsewhere, on a more serious note, the OECD is updating its outlook as the war in Iran continues, now seeing U.S. inflation hitting 4.2% this year. OECD Secretary General Matthias Cormann spoke on Bloomberg Surveillance.
We don't know what we don't know. I mean, we don't know how much longer this conflict will last. We don't know how much worse it could get. And I mean, there's significant downside risk, but there's also upside risk or upside opportunity. I mean, things could turn out better than what we're fearing.
Bloomberg's Oliver Crook joins us from the G7 foreign ministers meeting in France. And Oliver, in that interview, John asked the OECD minister, is this a moment that foreign governments are prepared for with an additional strain on finances? What are you hearing there?
Yeah, I mean, I think that it's fair to say that no one is particularly prepared for what the outflow, what the sort of consequences could be from this oil shock. I think that the moment we've been waiting for in the conversations I've been having in the last couple of weeks, either with industry and with ministers, is this moment at which this becomes a sort of oil and energy shock and turns into a crisis. And we got a bunch of different timelines from a number of different people. A lot of the industry people I've spoken to over the last couple of weeks say it's about a 2-month period of time. I even spoke to a world leader who was saying they weren't really even going to consider the consequences if this war went beyond 10 days, and that is almost that period of time is almost up. So the foreign ministers sort of gathered here. I think for them is an opportunity when Marco Rubio arrives tomorrow as a sort of fact-finding mission to the U.S. Secretary of State to understand what is in the mind of Donald Trump, how this war, they see it progressing, at what stage we're in. I think that, there is a very big question, even within the U.S. administration, to all of those questions. But for the foreign ministers here, I think the other sort of goal is to try to get an understanding what the United States would like to see from allies. We've heard from the President of the United States demanding that the allies help in the Straits of Hormuz. I caught up with the Canadian foreign minister a little bit earlier this morning and asked what role Canada could play. Have a listen.
Canada was not consulted and we didn't participate, have no intention to participate in the offensive action. In terms of any defensive action by NATO or otherwise, Canada takes such decisions collectively. And in the context of the NATO body, there are 32 member states, and we look forward to participating in a conversation with NATO member states should that arise in the context of the multilateral organization.
And that conversation that she's referring to is a conversation that really Mark Rutte, the Secretary General of NATO, would like to get going. He says that there is now a coalition of 30-plus nations that could take some kind of role in securing the naval passage of ships at the Straits of Hormuz. At what point in time after the war and a sort of the day after sort of situation, probably more likely, but we're still very much in the day of. And that being said, Dani, as Marco Rubio heads over here tomorrow morning, we had also a truth from the president saying NATO nations have done absolutely nothing to help with the lunatic nation now militarily decimated of Iran. The USA needs nothing from NATO, but never forget this very important moment in time.
Of course, it probably doesn't help he's asking assistance from nations who are also facing the threat of tariffs and all that sort of thing. I know you've been looking at Germany, who's been drafting plans for whatever might come their way to hit back at the U.S. Oliver, what are the details?
Yeah, this is a great scoop from our team over in Berlin and over in Germany, talking about what the Germans are doing to try to fight back against the Trump administration should they need to weaponize some of the leverage that they have. And we understand, speaking to some government officials, that they're looking at sort of weaknesses potentially for American companies. They could be targeting U.S. tech companies that could threaten the tech rally and the AI rally over in the United States, pharmaceuticals as well that could elevate prices ahead of the midterms. These are some of the options that the Germans are considering. That being said, Dani, the points of leverage that the Germans have, or any European nation has over the United States, are sort of pale in comparison to, of course, the great deal of leverage the United States has on many of these nations. So I think for many of these nations, it is logical for them to consider possible action that they could take. That being said, I mean, you can imagine how the United States could retaliate. They could withdraw intelligence, all support from Ukraine. That would be cataclysmic for many of the European leaders and foreign ministers here. They could also potentially withdraw access to the cloud for all the kinds of technology that the European companies are dependent on the United States. So again, it's just drawing up the plans. We spoke to the Canadian foreign minister about that. Is the Canada doing the same thing? They said that they're really focused on the here and now, and that's something I think they want to discuss publicly.
Oliver, thank you for your reporting there in what looks stunning, I have to say. That's Bloomberg's Oliver Crook reporting from the G7 foreign ministers meeting in France. Still ahead, we're going to get more on the latest developments out of Iran with Dana Stroul, former Deputy Assistant Secretary of Defense for the Middle East. Stay with us for that conversation. You're watching Bloomberg Open Interest. Nearly an hour into your trading day, the worst of the losses starting to back off with reports that Iran received the U.S.'s ceasefire proposal and has responded to it. So talks are kind of ongoing. Looking at the gainers, Apple the biggest by points added. I wonder if this has to do with that Alphabet news, that they found a way to compress the need for memory. Of course, memory chips a big factor in Apple costs, so perhaps that's helping them out. Looking at the downside, if you see Nvidia, Meta, Alphabet, Broadcom off, the entirety of the market's going to be off. Nvidia, a recent report that for the first time since July, retail investors have sold off their Nvidia holdings. So some retail starting to flip. Looking at the sectors themselves, before when the markets opened, it was only energy that was positive. Now some other sectors joining in on the fun. Real estate, staples, materials. Materials have been beat up through all of this, of the additional costs of things coming through the Strait of Hormuz. Real estate, staples, again, more of the bond proxy, safety type sectors. Communications and tech, those are still in the bottom. I mentioned that Nvidia was one of the biggest losers today. Coming up, President Trump tells Iran to get serious before it's too late. We speak with Dana Stroul, former Deputy Assistant Secretary of Defense for the Middle East.
Seizing terrain or the threat of seizing that terrain can drive the behavior of the enemy. And I think that's what they're hoping to do by introducing them, drive them closer into the negotiations to try to bend to the U.S. will in those negotiations, or escalate this to try to bring this to an end.
That was retired Lieutenant General Robert Walsh on surveillance earlier. President Trump threatening further military action against Iran as the conflict roils global markets. Joining us now is Dana Stroul, Director of Research at the Washington Institute and a former Deputy Assistant Secretary of Defense for the Middle East. Dana, thank you so much for joining us this morning. I was just looking at your thoughts, and you said the prospects for a ceasefire or diplomacy via Pakistan are grim. Why are your expectations low for any sort of brokered ceasefire?
Well, first of all, there's really mixed messages coming out of Iran itself. There's been senior officials who have said that American starting positions are non-negotiable. So it looks like the regime is not at all willing to make meaningful concessions on the problematic behavior that started this war in the first place. And secondly, the United States is escalating right now. It's increasing its military force buildup in the Middle East. Marines arrive in the Middle East in the next 24 hours and then next week. Elements of an Army Corps 82nd Airborne have already been deployed to the Middle East. And this looks like the United States is positioning for increased military operations.
Well, presumably Iran is watching that as well. Dana, how might they react with a buildup of troops around them?
I think they've watched this Multiple times now. So Trump had ordered this really massive U.S. military buildup starting in January when he called for the regime to back off the people. And that's what led to negotiations with Trump's team and the Iranians through January and part of February. But this idea of escalate to negotiate, the Iranians feel or have said that the rug was pulled out from under them. They were talking, but then Trump went to war. And so I think they're looking at this and saying, well, this isn't a real negotiation because clearly the United States is looking for a ground operation.
Well, it's clearly an Iran that's emboldened and realizes that they can wage not just warfare, but economic warfare with what they're doing in the Strait of Hormuz. Dana, what kind of negotiating position does that even put the U.S. in? Any sort of deal reached, would it be much worse than the one they would have reached before the outbreak of this escalation?
Well, where we started was Israel and the United States talking about eliminating the ways in which Iran can project power and intimidate the rest of the Middle East. Its missile program, its drone arsenal, its nuclear weapons program, its navy. And over the past month of war, the United States and Israel have steadily taken out all of those capabilities. And what we've seen from Iran is an asymmetric response by threatening to close the Strait of Hormuz, saying that nobody can pass other than the ships the Iranian regime approves. That's exactly what's happened. International shipping has stopped. That's an asymmetric response that has had tremendous and profound economic implications. And so whether it's Trump saying, well, it's open, or the Iranian regime saying will allow ships to pass, what's I think unclear is when the private sector ensures and shippers perceive that the Strait of Hormuz is once again safe for international transit.
Well, today, Iran saying that is part of its necessities in order to negotiate any sort of ceasefire, that it must exercise sovereignty over the Strait of Hormuz, and it is and will remain its natural and legal right. Dana, will that just be a non-starter for negotiations from the American side if that's what they're getting, the sort of feedback they're hearing from Iran?
Absolutely. And it should be a non-starter for the international community. The Strait of Hormuz is an international waterway. There are international legal paradigms that govern the free flow of maritime traffic and commerce. And here is a clear area where even if the international community does not agree with the premise for Israel and the United States to have initiated this war, everyone should be able to stand together and say no bully and no adversary should be able to close an international waterway. And I think that's actually why we've seen more and more coalescing of international coalitions, governments, and navies saying they would be willing to contribute to some sort of international presence here to insist that the strait remain open.
Well, just to that point, the Gulf states, the Gulf Arab neighbors of Iran certainly seem to be part of that conversation, Dana. There was reporting that they're considering joining the U.S.-Israeli war against Tehran. What sort of role do you expect them to play as this conflict continues on?
Well, first of all, the reason that the Gulf states have been on the receiving end of a tremendous amount of Iranian missile and drone attacks is because they have partnerships with the United States, because they host the U.S. military. And what Iran is trying to do is threaten the very way of life of these Gulf countries who rely on international shipping and the ability to get their goods, including energy resources, out to international markets. And that idea of trying to pressure the Gulf states to sever ties with the United States has backfired. These are countries that are actually quite aligned with the United States right now. They are not asking for Trump to commit to a ceasefire right now. In fact, they're actually, most of them, pushing for a more decisive end where the Iranian regime cannot hold hostage the international economy. And they're contemplating all sorts of potential action to support U.S. military operations inside Iran.
I was looking at some of the surveys. Deutsche Bank did a survey, and most of the respondents expected a ceasefire to be reached in April. Polymarket pricing in something similar, despite what the noise is happening on the ground, or not noise rather, but the facts on the ground. What is your assumption in whether this is something that can come to a conclusion in the next couple weeks or might stretch on?
Well, April starts next week and is a long month. So when the United States started this, they said 4 to 6 weeks. We're about 4 weeks in, and clearly there is active military staging and planning for the next phase of this campaign, which could include ground forces. Can all of that be wrapped up within 2 weeks? Probably not, but it also depends upon what kind of political process is available on the other side of military fighting, and whether or not Trump can say he actually delivered some kind of conclusive end here. And that really does hinge on whether or not shippers in the international community perceive the strait to be open for business.
Dana, thank you so much for joining us this morning. We really appreciate your time. Dana Stroul, Director of Research at the Washington Institute and former Deputy Assistant Secretary of Defense for the Middle East. A quick check on markets this morning. The worst of losses starting to ebb, down 0.4%. I believe we are still on track to end at a weekly gain. Every single week since this conflict broke out, we have seen losses. So perhaps this brings an end to that, at least for the time being. Still a lot to play for. The NASDAQ underperforms. NVIDIA is down. We're seeing the first selling of NVIDIA by retail investors since July. 10-year yields, those drift higher by nearly 3 basis points. They are at 436.19. Brent crude also above $106 a barrel. That's up by 4% this morning. Everything being dictated by the price of crude. Now, some of the single stock movers we're also looking at this hour. Memory stocks under pressure. Google announced a new technology that powers AI at the fraction of the computing and memory power currently needed. Shares selling off as much as 6.6% for Sandisk, but remember, that rallied like 1,000% over the past year. Elsewhere in tech, a jury found Meta and Google liable for harming young users with products designed to be addictive in a landmark trial. Elsewhere, Jefferies posting results that missed Wall Street estimates due to losses on credit bets, but it also saw a record quarter for investment banking, so shares perking up just a little bit. Happening right now, President Trump participating in a cabinet meeting at the White House. We're going to continue to monitor this and bring any headlines. At the moment, he's talking about the shutdown. All eyes on what he might have to say to Iran's response about their ceasefire. We'll bring you that if we get to it, and you can watch the cabinet meeting. Live Go is where you want to head on your terminal.
They need to end the shutdown immediately, or we'll have to take some very drastic measures. This morning, I want to give an update on the operation.
Happening right now, President Trump participating in a cabinet meeting. Let's listen in.
The drones, too, are way down, but the reason they're down is they go one way and they don't come back, because for the most part, we're shooting them down. But we also are able to, we've really done tremendous damage to the places where they make them. And just so we set the record straight, because I've been watching the Wall Street Journal's fake news and all these stories that get printed like, oh, I want to make a deal. They are begging to make a deal, not me. They're begging to make a deal. And anybody that saw what was happening over there would understand why they want to make a deal. But they say, oh, we're not talking to them. Anybody would know that. And only a total fool. And they're not fools. They're very smart, actually, in a certain way. And they're great negotiators. I say they're lousy fighters, but they're great negotiators. They are begging to work out a deal. I don't know if we'll be able to do that. I don't know if we're willing to do that. They should have done that 4 weeks ago. They should have done it 2 years ago. Or they should have done it when we first came into office, because 2 years ago they had free reign under Biden. Sleepy Joe, worst president in the history of our country. What he allowed to happen to our country at the borders, and even with a thing like this. But not just him. Every president for 47 years, every president should have done this. They should have done it a long time ago, because you cannot give lunatics a nuclear weapon, and they would have had a big one. It stopped, really, when we did the B-2, but even before that, the Barack Hussein Obama, what he did where he gave them the Iran nuclear deal, gave them free will toward a nuclear weapon. Basically, he chose Iran over Israel and others that didn't want him to do it. But I terminated that deal. Had I not terminated that deal, you would have had a nuclear weapon years ago, and it would have been used, guaranteed. And one of the reasons you know about the guarantee is because their neighbors were sort of like bystanders. They weren't involved very much. They didn't choose heavy sides. They didn't want to, because people were concerned with Iran. There was a big black cloud over the Middle East. They were concerned, but all of a sudden the war starts, and they start shooting at these 5, in particular 5 countries. They start shooting at Qatar, Saudi Arabia, UAE, Kuwait, Oman, they start shooting at them, and everybody was shocked, including us. You know why? Because they're sick, and they had a plan to take over the Middle East. And some of those missiles that were shot at them were locked long before we even started this process. They were locked and loaded and aimed at those countries. They wanted to take over the Middle East, but we happened to come along, so it wasn't so easy. So right now their navy is sunk in the largest elimination of a foreign navy that has taken place, maybe ever, but certainly since World War II. Their Air Force is gone. Their anti-aircraft and communications capabilities are totally dismantled. And one of the problems they do have when they deal with us is we deal with people and the people aren't able to communicate with anybody else. So, because all of their leadership has been gone. The first level is gone, and they met to pick a new level, and they're gone. They're all gone because they didn't make a deal and because they're sick people. They're really sick. They're really sinister, sick people. And if anybody thinks it was okay to have a group of people like this to have nuclear capability, nuclear weapons, and if we didn't attack with the B-2 bombers, they would have had a nuclear weapon within 2 weeks of that, maybe 4 weeks. But between 2 and 4 weeks, they were planning to have a nuclear weapon. If we didn't hit them at that time with the B-2 bombers, and one of the great air raids in history, maybe the greatest, dark at night, no moon, no light, every single bomb hit its mark and just obliterated that place. So it's now buried deep under earth. And it was an amazing thing, but they would have a nuclear, and they would have used it without question. And you know that because why did they shoot all these countries that weren't even really involved with them? They weren't involved. They had no big problems because they're sick, because they want to take over the Middle East, not just Israel. Certainly Israel would have been the first on their list. They would have used nuclear weapons, a nuclear, you don't need too many of them, but they would have used a nuclear weapon on Israel, and they would have used it on the neighbors, and then they would have come after us. And if we had a weak president, they would have done great damage. But fortunately, you don't have a weak president. I knew what was happening. And I think we've been proven right. They took one missile, it went 2,500 miles. They supposedly didn't have a missile like that. They had no missile with that capability. But they shot the now famous Ireland, the island that the UK was very afraid to give us because they didn't want to get dragged in. But we don't want to get dragged into their wars either. It's one thing we're very disappointed, I'll say it publicly, we're very disappointed with NATO because NATO has done absolutely nothing. And I've always said, 25 years ago, I was somebody that wasn't a politician, but I was always involved in politics and I understood politics. I said 25 years ago that NATO's a paper tiger, but more importantly, that we'll come to their rescue, but they will never come to ours. And I want you to remember that we said this. They didn't come to our rescue. Now they all want to help. When they're annihilated, the other side is annihilated, they said, we'd love to send ships. They actually made a statement, a couple of them, that we want to get involved when the war's over. No, it's supposed to get involved when the war's beginning, or even before it begins. We had the UK say that we'll send, this is 3 weeks ago, we'll send our aircraft carriers, which aren't the best aircraft carriers, by the way. They're toys compared to what we have. But we'll send our aircraft carrier when the war is over. I said, oh, that's wonderful. Thank you very much. Don't bother. We don't need it. And we don't need it, and we don't need them. We estimated it would take approximately 4 to 6 weeks to achieve our mission, and we're way ahead of schedule. If you look at what we've done in terms of the destruction of that country, I mean, we're way ahead. Think of it, they have no navy, and they had good ships. 154 ships have been shot down and are resting very nicely at the bottom of the sea. And we did that in a matter of less than a week. Because we have the greatest military in the world by far, nobody even close. So we estimated it would take approximately 4 to 6 weeks to achieve our mission. 26 days in, we're extremely, really a lot ahead of schedule. The Iranian regime is now admitting to itself that they have been decisively defeated. They're saying to people, this is a disaster. They know it. That's why they're talking to us. They wouldn't talk otherwise. But they're talking to us because they've got a disaster in their hands. They're defeated. They can't make a comeback. We're free to roam over their cities and towns and destroy all of their crazy nuclear weapons and missiles and drones that they're building. And we're doing that. They now have a chance to make a deal, but that's up to them. And they'll tell you, we're not negotiating. We will not negotiate. Of course they're negotiating. They've been obliterated. Who wouldn't negotiate? They are begging to make a deal. We'll see if we can make the right deal. And if they make the right deal, then the strait will open up. Hormuz Strait will open up. And even now, we don't know if there are any mines. You know, they have 22 they call mine droppers. Think of it. Who would have 22 mine droppers? There's a boat that drops mines. Who has 22 mine droppers? Except for people with very evil intention. So every one of those mine droppers has been struck with the same weapon we used to stop drugs from coming into the United States of America. When we hit those boats, it's the exact same weapon, extremely effective. We have unlimited supplies and extremely effective. But they have no more mine droppers. By the way, speaking of drugs, we're 98% down drugs coming in by water, by the ocean, by the sea. 98%. And we're trying to find out who are the 2% because we think they're the bravest men anywhere in the world. Maybe women. But whoever's on those boats is very brave or doesn't watch television. But where drugs coming in by sea, coming in by water, are 98% down. And now we'll stop the drugs coming in by land. The land is the easy one. You had to stop the water. A lot of it came into the water. Now it's all pinched. And these people are trying to come in by land. And we will, that's it, that's the easy one. But we had to take care of the water first. Nobody's coming in. Virtually nothing is coming in anymore. It was hundreds of millions of dollars a week were coming in by water. But they now have the chance, that is Iran, to permanently abandon their nuclear ambitions and to chart a new path forward. We'll see if they want to do it. If they don't, we're their worst nightmare. In the meantime, we'll just keep blowing them away, unimpeded, unstopped. Well, there's not a thing they can do about it. They can't do anything about it, you know. I tell you, if they could, you'd be hearing about it. You'd be hearing about it. You don't hear anything about it. They can't shoot our jets. We have the best military equipment in the world. No, not even a contest. And you see that with Venezuela. They had other equipment. They didn't have ours. It didn't work. Didn't work. Think of it. We did the situation in Venezuela. It was a great military operation, getting a very, very dangerous man who's killed a lot of people, forced people into our country. Incredible. He emptied his prisons in Venezuela, emptied his prisons into our country. And I hope that charge will be brought at some point, because that was a big charge that hasn't been brought yet. It should be brought. He emptied his prisons into our country and was a major purveyor of drugs coming into our country. And he's now been captured and he'll, I guess be given a fair trial. But I would imagine there are other trials coming because they've really sued him just in a fraction of the kind of things that he's done. Other cases are going to be brought, as you probably know. In the meantime, with Iran, we're going to keep doing what we've been doing, and nobody's a match for the United States, but they're not a match for the United States. It's small potatoes. That's why I'm so disappointed in NATO, because this was a test for NATO. This was a test. You can help us. You don't have to, but if you don't if you don't do that, we're going to remember. Just remember this in a number of months from now. Remember my statements. They have an expression, a great expression, never forget. Never forget. So as we end threats to America abroad, we're focused here at home on building the greatest economy in the history of the world. Now, before this started, the Dow hit 50,000. The S&P hit 7,000. Both of those achievements were not achievable. Every one of you, most of you, I guess, said you'll never hit 50,000 during a 4-year period because it was too high a number. Well, we hit it in our first year. And I said, well, now we have to take an excursion to Iran and we have to stop this maniac who's no longer with us. The supreme leader wasn't so supreme, no longer with us. It's very sad. But we have to stop him from blowing up the world, blowing up the Middle East, and blowing up our country. And we did that. And I thought, frankly, I thought the oil prices would go up more, and I thought the stock market would go down more. Hasn't been nearly as severe as I thought. I think they have confidence in maybe the American president and maybe the people sitting around this table. But Americans filing their taxes this year are receiving record-setting refunds. It's been a very big story. Well, it should be a big story. I don't think you read about it that much, but I speak about it. You know, I speak about it because if I speak about it, at least people hear. You don't write about it. You don't write about the drug prices going down. It'll be going down 30, 40, 50, 60%, 70%. Favored nations, called most favored nations, we're going to be paying the lowest price anywhere in the world. Before we paid the highest price in the world, Bobby, right? And now we're going to pay the lowest price in the world. That's quite a difference. It's a difference of from 40 to 70 and 80 and even 90%. That's a pretty big difference. But we're slashing regulations and investment is pouring in from all over the world. We have the most investment of any country in history has been put into our country in the last year. And again, we had to take a little detour. Won't be long. Going to end soon. We had to take a little detour, go to Iran, and we had to put out a fire. Very dangerous fire that could have blown up big portions of the world, if not the whole thing. So tomorrow we'll be announcing a variety of actions that we're taking to support American farmers, who we never forget. We love the farmers. We gave them $12 billion out of tariff money. We had a tremendous amount of tariff money come in, and we continue to have. We've gone, as you know, the Supreme Court gave us a very unfortunate, foolish ruling, a ruling that gives the people that have ripped off our country for many years, gives them some money back. But it's one of those things. It's a terrible, terrible, horrible mistake they made, but it's okay because we have another method that's just as good. We'll use the other method. But because the tariff money has been so substantial, we gave our farmers who have been mistreated by some countries, we gave them $12 billion, and they're extremely happy, and they deserve it. They've been great. They never complain. They just go out and they farm, and they wouldn't do anything different. They wouldn't trade jobs with any of you, except maybe some of the fake media. I don't know. Somehow I don't see that. I like their job better, actually. I love the farmers. So we gave them $12 billion. So in just a few moments, Treasury Secretary Scott Bessent will discuss the actions that we're taking to address energy prices, which have not gone up as much as I thought, Scott, to be honest with you. And, you know, it's not over, so maybe it'll go up a little bit more. It's all going to come back down to where it was and probably lower. And my predictions have been right. Trump was right about everything. They have a new hat. Trump was right about everything. It's pretty right. But Scott's going to address that. And I think before we go very much further, I want to ask Vice President J.D. Vance to say a few words about where we are with the situation. He's involved with Steve and with Jared on negotiations. And then some of the others will speak. We'll have Marco say a few words. Pete Hegseth, who was born for this role. I mean, he's doing a great job. They gave him a hard time. And now people, I'll tell you, somebody came up to me yesterday, gave you a very hard time, said, you know, I made a mistake. Pete Hegseth is doing a good job. So when I tell you who, you're not even going to believe it. He said Hegseth. He gave you such a nasty hard time. But you're doing